Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
This week, we have 4 very interesting webinars lined up, and we hope you can make it to the one that interests you the most. The first one at 10 a.m. is Debt versus Arbitrage, in which we will talk in detail about the two asset classes. At 11 a.m., we have Strategies to Save More, in which we will speak about various ways to effectively increase your savings and secure your financial future. At 12, we have a webinar on India's capital cycle, which will talk in detail about the current capital cycle of India and the valuation of the markets. We have another very interesting webinar at 12, Setting a PMS Milestone, which will explore the strategic decisions that one needs to take to shape a successful PMS. We hope to see you all there.
In today's video, we're going to talk about some wealth creation strategies in the current market context. There are some investors who are quite positive on where India is going, especially given how prominent the India story is and the growth metrics that have come out through the course of this year. So if there is a bullish sentiment, there is a certain portfolio construction that's being followed. At the same time, you're also seeing FIIs sell, you're seeing markets show some levels of weakness, you're seeing some growth deceleration in terms of corporate earnings announcements. So with all of these mixed feelings in the market, we can look at a few wealth creation strategies that might tide us through whatever context the market evolves into. So the first thing that investors can do today is to avoid and minimize their leverage positions. Already you've had SEBI intervening in this market, publishing certain studies that show that a lot of investors have actually lost money in the F&O segment. So there is a move from even a policy perspective to get investors to reduce the amount of leverage in their portfolios. The second thing that investors can do is to look at maintaining their target asset allocations. So if we start out with a particular asset allocation and we've had certain investments perform beyond what our expectations are, it's a great time to rebalance your portfolio and actually come back to whatever you set out as your target asset allocation. The third strategy an investor should follow is to keep track of their cash levels in the portfolio. Whenever you're in an evolving context, you want to have a lot more flexibility in terms of acting out, because you might get different opportunities than what you actually prepare and anticipate. And we need to be ready for those opportunities. The best way to be ready for that is to have enough cash. So keep track of your cash levels, keep more cash than you originally planned for, and actually keep trying to grow that cash level either through savings or through restructuring your portfolio into newer opportunities. Now, the fourth and final thing that you can do as an investor in an evolving market context is to actually have a risk portfolio. This piece is specifically for those investors who still want to be aggressive in their approach and are quite positive about the context. Having a risk portfolio means a dedicated portfolio, maybe say 5 to 10% of your net worth, depending on how much you can actually afford to risk completely, where you do exactly what you want. So whether it's F&O, whether it's speculation, whether it's certain riskier trades, all of these things can be done within 10% of your portfolio. Why such a small amount, especially if you're an aggressive investor? The point is, we really don't know how very risky bets work out. And overall, our philosophy has taught us that higher risk doesn't always lead to higher rewards. So being a little bit careful about risk can teach us how to manage risks better and understand the nature of the high risk, high reward game that you're playing. So this risk portfolio allows you to play around with whatever you want. At the same time, it doesn't affect your overall wealth creation journey, and it's a great playground for you to learn and explore risk in financial markets. Market contexts keep evolving, so if you have any interesting strategies that you use in an evolving market context, let us know in the comments below.